up, guys? Today I'm going to be talking about take profits and stop losses. I don't have much for this video. It's early as fuck right now, so I'm not going to be too energized for this video. But I'm just trying to pump content out for you guys. It's Friday right now. I said I was going to make a video every Monday, Wednesday, Friday. So here I am. Today it's going to be take profits and stop losses. So take profit one. For me, usually, whatever time frame you trade on, go up 2 time frames and put your TP at a high slash low. So if you're executing on the 1 minute, put TP at the 15 minute. If you're executing on the 5 minute, put TP at the 1 hour. If you're executing at the 15 minute, put TP at the 4 hour. If you're executing on the 1 hour, put your TP at the daily. And then take profit 2. Just do the same thing. Same thing, but the next draw on liquidity. And then take profit 3, put at, oh gosh, why can't I think of it? So you either put it at the 3rd time frame of whatever you're trading on. Yeah, I'm just gonna say that. Put it at the 3rd time frame of what you are trading or what you are executing on. So go over stop losses. So stop loss, put at the low of the fair value gap candle, or put at the low slash high of the candle. So I'll explain that a lot better. That's a lot harder to explain just typing it. And then, or put where you know your trade will be invalidated. Oh, I spelled that invalidated. Did I spell that right? No, I didn't. That was really bad. Invalidated. So stop loss is going to be a little bit simpler. You're either going to put the low of your fair value gap candle, or you're going to put it at the low slash high of the candle. So like a low or a high of a candle. And then, or you're going to put where you know your trade will be invalidated. So I'm on the S&P. I'm going to go to NASDAQ. Get all this stuff out of here. Okay. So say this was a trade right here. So you see it respects it, it goes into it, it goes out of it. So what you're going to do is you're either going to put your stops right here because it's the low of the fair value gap candle, or since there's another fair value gap right here, since there's another fair value gap right there, you're going to put the low of this fair value gap. Or if you're really trying to not get stopped out, you're going to put it at the low of this fair value gap. Just in case price wants to go all the way down, because you know price wants to go, like say price wants to go to these highs. I'll have to look at for TPs. But say it wants to go to these highs. You know it wants to go to these highs, but you don't know where price wants to go down because your entry is right here. And just because your entry is right here doesn't mean you can put your stops right there. Because then, bam, what's going to happen? You're just going to get stopped out, and that's going to go without you. For example, if we go down here, so let's see here. There's obviously no trades right here. There's no fair value gaps, no nothing. But if you were to be like, okay, I'm trading whenever it hits equilibrium, if it breaks structure right here, I'm going to get in. So say you get in right here, you're going to put your stops below this low, correct? And then for take profits, you're going to go, since we're executing on the 1 minute, you're going to go to the 15 minute. And then you're going to the 15 minute and you're going to see the next high. So highs right here, okay? And then you're going to the next 15-minute high. So you can get a little versatile with this. So you can either target this low of the fair value gap candle right here, or you can target this high of the fair value gap candle. I always target the highs. That's just kind of preference in what I do. Obviously, better risk to reward. Sometimes I will get stopped out because I do target the highs of the candles. But anyways, going back down to the 1 minute, this would be your trade. So then it works, obviously. So then, bam, 15 minute. So then you go TP2 to this 15 minute. That was 1,000 ticks. Holy crap. And then you go right here. You go to the hourly time frame. And then you would target this. And obviously this one didn't get hit yesterday. But this would be hypothetically your trade if you would have taken it off of that just break a structure. So yeah, that's what I got for you guys for take profits. I'll show another example. All right, so then say we go to the 5 minute, correct? Say you execute on the 5 minute time frame. So say Thursday comes, we have this low right here, or this high that was made. Say it breaks structure. You get in right here, put stops right here. You're gonna put your stops at the low right here, okay? But then say you enter right here as well. Say you enter right here off this respection of the fair value gap. You're gonna put your stops below this fair value gap because that's where your trade is gonna get invalidated. So then you're gonna put your stops. This is probably gonna be the hourly high. Let's see. Oh, so this was still yesterday. But, so what's going to happen? So you see this 5 minute get respected. You're going to target the hourly right up here. It's not going to get hit. But if you entered your trade right here, so say you enter your trade right here, your stops are going to be bigger, obviously. So then you go to the hourly time frame because that's 2 time frames higher. And then you're going to put your take profit right there. And then, bam, that's your trade. And then your next take profit would be the next hourly. So then obviously that one doesn't get hit, but just showing you guys an example. And then say we trade on the 15 minute time frame. All right, so say you take a trade on the 15 minute time frame. So if you're taking a trade on the 15 minute time frame, what do we have right here? We have a fair value gap. What happens? It gets respected. So we enter right up here. We're going to put stops. So here's the thing with this fair value gap. So this 15 minute fair value gap gets respected, obviously, correct? So you're going to be like, okay, you're just going to put stops right below the fair value gap right here. This is going to be your stop. Because once price goes back down into there, your trade is going to be invalidated. So, say we go to, so what do we do next? We go 2 time frames higher. So we go to the 4-hour time frame. If I can find my trade. So on right here, we have this for a take profit, and then we have this for a take profit. We have this for a take profit. So I'm going back to the 15-minute. So look what happens. Obviously, terrible risk to reward. Take profit 1, take profit 2, take profit 3. So, going back to it, you obviously have to find the right trades and everything. But for take profits, what you mainly want to do is 2 time frames higher. And say it's bad price action, say it's like a no news Monday, just do 1 time frame higher. But what this is going to do, it's going to boost your risk to reward rate, and it's going to boost everything else. Because just think, you're going to make more money because you're targeting higher. Sure, you might lose a little bit more, but you're probably going to end up more money in the long run than if you just target. So like say yesterday, say all you did was target these highs. Look what you're missing out on. Like if you just target these 1-minute highs, you're missing out on all of this price, all of this action. You're missing out on everything. If you target it here, yeah, it's 655 ticks. But guess what? You're still missing out on everything. So it's like, that's why you need more than 1 take profit. Like some people will just go like this. They'll be like, okay, price is supposed to go up all the way back, and they're just going to have 1 big take profit. That's what you shouldn't be doing. You shouldn't be doing that. You should, at minimum, be trading with 3 take profits. So going back to here, take profit 1, your TP1 is going to be whatever time frame you trade on. Go up 2 time frames and put your TP at a higher low. Take profit 2, just do the same thing, but the next draw on liquidity. So still 2 time frames higher, but the next draw on liquidity that you should be looking for. And then take profit 3, go to the 3rd time frame higher, and target whatever high you're looking for. Or low. It could be a short too. Actually, let's show a shorting example. So what do we got here? Fair value gap gets respected. So we're going to put stops right at the high of the fair value gap candle. So literally right 1 tick above it. And then what are we going to do? We're going to go down to the go up to the 15-minute. So then where's the next round liquidity? Right here. Okay. We're still on the 15-minute because we executed on the 1 minute. So then we go to this 15-minute liquidity, and then we go to the hourly time frame. And then what's our next draw on liquidity? We have this ginormous low right here of a fair value gap. Or if you're trying to play it safe, target right here. It's completely up to you and its preference. But as you guys can see, here's take profit 1. Bam, gets hit instantly. Take profit 2, hit instantly. Take profit 3 gets hit. If this is your take profit 3, this would have been my take profit 3. It would have been a ginormous trade you just took. But yeah, that would have been your short. And it's all because you had your right stop loss and you had your right take profits. And see? And if you're playing it safe, so say you just get an off list break of structure, you would have just put your stops right here. So these 2 extra ticks, believe it or not, they're going to save you so much. And if you're getting an off list fair value gap, it's going to save you maybe the potential of getting stopped out. And that's the last thing that you guys want. So going back to stop losses, put it at the low of the fair value gap candle or the high of the fair value gap candle, depending if you're buy or sell. And then or put it at the high or low of the candle if you get it off a break of structure, equilibrium, just stuff like that. And then or put where your trade's going to get invalidated if this confused you too much. And then take profits. Take profit 1, we talked about this. 2, we talked about. 3, we talked about. Just listen to this, and you guys are going to be taking better trades, more quality trades. Hope this helped a little bit, and yeah, that's all I got for you guys today. Thank you for watching.